Howdy folks, welcome to the Daily Coin. My name is Rory and today is Sunday, June the 30th, 2019. And I hope this message finds you doing well. I am here with a gentleman who is a world traveler and he is a great entrepreneur. He has wonderful insights to what's going on with the markets, and he puts out some incredible reports for free and that you can find over at wealthresearchgroup.com. And I'm speaking of Mr. Lior Gantz. Lior, welcome back to the Daily Coin.
Hey, how are you?
I'm doing well. And you are out traveling about right now, is what we were discussing just before we started recording. And I hope
Definitely.
that you and the family are having a good time.
We are. We're in France right now at the in Nice, which is the third largest city in France, and it's like the crown jewel of the French Riviera. Lots of tourists here, lots and lots of people. In fact, you can't get a table at any restaurant at night unless you book it. Unbelievable. You can think like the economy is very very heated up, and it's not even the 1st of July yet. So definitely people are not are not saving up as much as they should, in my opinion, for what's coming.
Well, no, I agree. I see that here in Tennessee as well. Probably not to the extent of people vacationing the way that they would be in France, but I still see it, and it's mind-boggling to me that the how thick the blinders are on most of the people. But I wanted to ask you about, we have some really exciting news going on for the first time in a while. We have both gold, and you're a big fan of Bitcoin. Personally, I'm not, but that's okay. But gold has been making a lot of noise for the past month. It's up about 11%. It's down a little bit the past couple of days, but otherwise it's been on a real tear, which is a welcome sight to see. And what do you think? What's going on with gold right now, Lior? What are you watching?
So I think the first thing that's important with gold is the fact that it's very much priced into this rally. The fact that the Fed is going to cut rates probably in July for the first time. So what you're seeing essentially is the market anticipating a new rate cut cycle. And before the first rate cut, gold has never not rallied. So this is a very expected rally. When the Fed pauses rate hikes and then starts shifting its rhetoric towards rate cuts, gold rallies throughout history, every rate cut. So that's priced in, and you can see that is really priced in when you look at the correlation between gold and inflation, inflation protected treasuries or tips. So that is already priced in. As much as we've gone to 1436 and today 1405, that is a full priced valuation as compared to the coming July rate cut if they cut. What's not priced in, and it's a beautiful thing if it happens, is the dollar is already at a 3-month low. It's sitting on the DXY right in that 96 point range. If it goes down another percent and a half, it will go down to a 6-month low and enter a bear market. Now, the dollar has been on a bull market compared to other fiat currencies. So, in other words, the DXY, the dollar index, has been on a bull market for 8 years, since 2011. You need to look at an 8-year chart to understand. And then, obviously, in around 2014, it really picked up. Started rallying big. So that's already happening. And if it drops another percent and a half, Rory, it will go into that bear market. The first bear market in 8 years. All commodities will get repriced. In fact, the entire world will get repriced. That's what a dollar bear market or a bull market does. and that is very favorable for gold. That is not priced in yet, and you might even see gold 2000 if that happens. Now, I should say two things. One, the average dollar bull market is 7 years. This one has lasted for
Right.
8 years, and 2018 last year was the year when the dollar index was the best performing asset class on in the planet. The last time that has happened was 1969.
Wow.
2 years, yeah, 2 years before the greatest devaluation of the dollar ever. So, just very important to note, when the dollar is the peak, is the best performer of all asset classes in the world for an entire calendar year. That is as close to peak for a bull market as it comes. We wrote about this extensively at wealthresearchgroup.com/dead, like DEAD, from deriving from dead dollar. And we wrote about it at wealthresearchgroup.com/take, because we believe that what Trump is doing right now is the same as what Nixon did in 1970, 1971, where he really pressured the Fed to lower rates extensively. So Nixon did that. He was afraid of recession and high unemployment on his watch. Trump is obviously afraid of the same thing, and he has another campaign trail to pursue, and of course, all of the leverage that he will ever have to deal with China comes from the fact that the economy is doing well in the United States. If the economy was not doing well, he would need to do a trade deal tomorrow. The fact that he can massage this thing and say I don't agree with the terms that Chinese are all the leverage is because the stock market is at all-time highs.
And that came from
in fact,
the Fed.
Yes, the correlation between the S&P 500 price and money supply is almost 100%.
Right.
It's incredible. So I think that is a key thing. If you go to wealthresearchgroup.com/dead and /take, you will understand the dynamics of what's going on. Obviously, Trump cannot officially decouple gold from the dollar anymore, but what he can do is peg the U.S. dollar to zero rates, which is what the euro and yen have already done. In fact, the dollar is the only major currency to not be pegged to zero rates. And if he does that, essentially what the Federal Reserve's role is going to be is to buy bonds, is to monetize debt and suppress interest rates. They will not do anything anymore with regards to rate hike or rate cuts, at least in the foreseeable future. If he pegs it down to zero, he's gonna say that's it. It's gonna. I'm telling you from here on, you do not control interest rates anymore. Put it to zero. Start buying my bonds because I need to issue a whole trillion of them every year over my budget, over my income that comes from tax revenue. And if there's a recession, probably around 1.8 billion. And for that to happen successfully, I need interest rates low. And then he's going to start talking about taxing the rich and doing everything else to raise tax revenue, because the best way to raise tax revenue in a recession is to take it from the rich, who are obviously less fragile in a recession. So I think that's coming. Some sort of an incentive money is also coming for the middle class and the lower income class. And when I say that, I mean that what they might do is they might take veterans that are due their pensions in about 10 to 15 years and send them all the money right now. Tell them that if they do not spend it or take it and do something with it in the economy, it will get extinct or evaporate. In other words, they will incentivize a part of the population, some sort of a demographic group, and tell them we're sending you money, but you need to spend it into the economy, or else you'll never receive it, or you'll receive it in 20 years like you originally did, but it's going to be eroded with inflation, etc. So I think that's sort of a stimulus is coming.
So you see so that sounds kind of like a UBI, universal basic income, but with a
Yes.
different tag.
Oh yeah, some sort of a credit is going to come because the inflation is terribly low on the official end for these central banks, and the only way for them to create money velocity is to force it on the people. So it's been done in the Great Depression days, coming off of the Great Depression. They did that with veterans, where FDR told them, "I'll give you your money 20 years ahead of time." But you have to spend it into the economy, and I think they will do that sort of program right now. I don't know if it's going to be the veterans again or if it's going to be Social Security or anything else, but they need to. The MMT people, the modern monetary theory people, they definitely support some sort of an incentive from the government to the people in order to stimulate the economy in a recession. And when they lowered rates to zero, in 2010, 11, and 12, what you saw is that when you do that without incentivizing where the money goes, then corporations take it and then they freaking buy back their own stock
Exactly.
to make CEOs richer. So they'll need to direct the money. They'll need to tell them exactly where that money goes, or make it illegal to not do something. You know what I mean?
Okay.
So I think there's a lot of political capital right now to do those sort of things. The have not economy has reached a point where the have nots are very fed up of what's going on. When you have a quarter of the country telling you that they're worse off than in 2008, so basically about 80 million Americans telling you, hey, we have seen no recovery. And when you have a situation where after 10 years, wages have not moved for the average person. In fact, they either flattened or went down, but executive or CEOs and the top echelons have seen almost a 40% increase in 10 years in their compensation.
Right.
And then couple that with the fact that they're double dipping, right? Not only are their wages going up, but their stock portfolio and real estate portfolio going up. And then the other side, they're not even so their rents are going up, their wages are going down. They have no equity in the stock market and no equity in real estate. So for this this sort of a wealth concentration, there's a lot of societal effect to it. So there's a lot of political. Sorry, yeah.
Go ahead.
No, I'm saying the political pressures to create some sort of an income equality and not an inequality are baked in the cake right now. You're already seeing Bernie Sanders and Elizabeth Warren and whoever else will come on, Alexandra Cortez and etc. So there's definitely those sorts of wins backing these people and their social programs. I think that is what's coming. Now, a lot of people saying that there is no problem with printing currency when inflation is low. It's so retarded to say that who I don't know how these academics came up with this stuff, but it should be banned. Those sorts of thoughts and programs and plans should be banned. You cannot continue to print currency to pay off for things without creating a debt burden. Now the problem is we haven't seen the major crisis. So you're extrapolating from your short-term memory and saying, okay, well, then there is no blowback. We can just keep continuing to print. But one day, it will come. It will come with all the force that you've ever seen. So,
but I think that there are other nations that will have a say in that, and I think that if the Fed fires up the printing press again, that you're going to see other nations, primarily China and Russia, step up and say, that's fine, print all you want, but we have China will say, well, we have the SIPS system, so we don't need your SWIFT system anymore. And Russia will say, and we have our MIRS system. Oh, and by the way, those two are linked together, so we don't, neither one of us and all of the nations that are signed up with us, we don't need your SWIFT system. We don't need your dollar. Print away. Have a good time. See you later. I mean, and that's,
Yeah, it's definitely something that can happen in the next 5 to 7 years, where the
I
dollar.
think that it can
Uh,
come a lot quicker than that because the systems are already in place. I mean, you already have all of the banking and financial institutions are already in place. They're already linked together. They are what China and Russia both are doing with the Belt and Road Initiative is making sure that there is the yuan is internationalized, not just I mean, it's global. I mean, they're all over Africa. They're all in the heartland. They are in Panama. They're in Brazil. They are in there. It's everywhere, and
they are.
it's oh yeah,
They are. It's true. But what's
yes,
important to remember is that right now the yuan is about 1% of global transactions,
yes.
and and the dollar is about 60%. So,
I understand that,
um,
but that can change. Is my
of
point
course,
is and it can change. It wouldn't take 5 to 7 years. Like I said, those systems are already in place. That can switch on it literally overnight. I mean, it wouldn't happen that way, of course, but maybe a year, 18 months max. Then you're
the dollar is the marriage between the dollar and its foreign holders is the same as the marriage with a dysfunctional couple, where the woman is fearing that if she divorces, she will not find a better alternative at her age. So,
But what
if that
about
makes
gold?
sense. In
I
other words,
mean, that's where we started
in a,
with gold. I mean, and there's been Russia has made it very clear that they are working on, if not already have in place, a gold-backed cryptocurrency. Malaysia just recently called for a gold-backed crypto trade note. Uh, Venezuela, for all its faults, for everything that's happening there, Maduro has in place a functioning, currently being used gold backed El Petro cryptocurrency that is being traded between Venezuela and Russia. That's happening right now, has been since April of 2018. So you have these things that are in place that are that they're very few people are talking about it, but they're out there. They're happening.
sure,
I mean,
sure.
and that ties into what with Bitcoin. I think that's part of why we're seeing Bitcoin rising is because people are kind of freaking out right now, going, "Wait a minute, there's something very wrong here." And I need to protect myself and I need to protect my family. And I don't know if Bitcoin is the answer. However, it's an alternative to what I see. Or am I wrong in that?
It's definitely what's happening. The timeline and the political pressures from all angles. Those usually take many years. People have been talking about the death of the dollar for
A
I think like
decade.
yeah, even more. And
Yes.
so the fact that there are alternatives is true. It's just a matter of the wheels are really turning very slow, and there's a matter of convenience. There's a measure of leverage. All kinds of things are happening, and before major global things change, usually there's a big crisis in front of them to open the doors up for new ideas. So I think that is also important. That's why I'm saying that as long as the stock market in the States is doing so well, um, uh, people do not understand that this is even a crisis. Once the crisis hits, people will speak differently. New ideas will be pitched, and we will see what happens at the end of this. Um, like I said, the most important thing is that whether or not the dollar goes into a bear market in the next few weeks, because that is that is the most important event of the year if it happens. Um, and like I said, it's only a percent to 1.5% away from where we are right now for that to
Right.
happen.
Yeah.
Um,
See, and that would be, wouldn't that be kind of a signal to the rest of the world that here's part of our opportunity. The window or the door of opportunity is now opening, and we can start realistically looking at making these changes that we've been working on since 2010,
what's really gonna
2011.
what's really gonna be important, Rory, is
Okay.
whether or not China and the U.S. will ink a trade deal. Once the trade deal is
Right.
in place between two countries, there is no incentive for one country to hold treasuries of the other country. So
Gotcha.
with China having $2.1 trillion worth of U.S. debt, and a trade deal in place, they do not need to hoard any more dollars. They
Right.
will start either selling them or just sitting on them, collecting the interest. But there definitely will be no need for them to keep buying, and that's the biggest buyer.
Yes.
So then the pressure will be on the U.S. What do you do? Do you slash spending, social spending, because social spending is 70% of the budget right now. It used to be 28%, and it's now 70%. Investing in infrastructure, etc., used to be 30%. It's now 15%. So you're seeing major changes with what the U.S. government is spending money on. And if they do not make the tough decisions to cut, they will need to keep borrowing money. If they can't auction bonds, they will need to monetize bonds, which means
Right.
that the Federal Reserve will actually need to print on a daily basis, not as a matter of emergency, not as a QE program, but as a matter of protocol. And that will put a lot of pressure on the US dollar to cease to exist as a reserve currency. Because why would you essentially invest in a currency that needs to get printed in order to stay alive? That it's a bankrupt currency,
Right.
and so that is the big trigger. And then we will see what happens, because the number two currency is obviously the euro. And why would you ever in your life put your trust in that currency? So
It's nuts.
and that's why. And then the third one, like the yen, don't get me started. And then you got China or India, the two rising stars. But the Chinese government, they're notorious for just devaluing the currency and saying, hey, our currency has been devalued overnight. Good morning, and this is the new value. So
Yes.
there's a lot of problems with the yuan. That is the reason that central banks are buying gold themselves,
Right.
because they need to stay as independent as possible from other fiat currencies. So we'll see what happens, Roy. It's a very, very unique situation, um, and the fact that we have such a concentrated wealth economy in the U.S. does not help at all, because it puts so much political pressure on elected officials to come up with short-term solutions instead of long-term ones, because people are
Right.
suffering. And so we will just have to see what the next recession brings with it and how this all plays out.
Now, do you
Uh,
think that with one of the long term solutions, I mean that Trump has been attempting to make is to get Powell out and to bring in a person that is a gold person like Stephen Moore, and now he's got Judy Shelton and on deck, and you know
that is a nuclear option to
right.
demote
Well, but I mean,
the chairman back to a governor is something that is unheard of in this country. And like I said, all of these nuclear options, they're good when there's a huge problem. Then you can say, okay, the Fed chairman has failed, and we will do one, two, three. But as long as you don't have that political capital to do these things, you can tweet about them, but that's as much as you can do. You can put a lot of pressure on somebody without actually doing the act, and that's what I think Trump is doing.
Okay.
It remains to be seen whether or not he really wants some sort of a gold backing. The U.S. currently has a 7% unofficial gold backing. So if you convert all of the gold with a ratio to fiat currency to the U.S. dollar, about 7% is backed. And so if you want to return back to the turn of the 20th century type, where it was 20%, then the price of gold will need to be around 4,000 an ounce. If you want to go back to the higher classical standard of 40%, it will need to be about $8,000 an ounce. And if you want to cover the entire currency supply, like happened for a few weeks in 1980, you need about $18,200 gold per ounce to do that. So it remains to be seen how you would do such a thing, but we've seen it before in the Great Depression. I mean, I'm not saying it can't happen, but the importance of a crisis to happen before it, in order to open the door for these extreme solutions, is sort of needed, because like in the Bible, these prophets of doom are not as exciting as prophets that tell you, hey, times are going to be very good. That's what people want to hear.
Well, so, and let me ask you, I mean, what would be your definition of a crisis of doom? I mean, what do you see as a trigger to one of these events to making that happen?
Sure. In the U.S. Right now, about 80% of the stock market is owned by the higher, not the elite, but just the wealthy, the top 10 the top 10 to 15% of the population owns about 80% of the stock market.
Right.
So if the stock market goes down, it will be a political nightmare for Trump, but it won't hurt the average person as much as layoffs. So if you see that American companies need to start laying off people, because the labor market is very tight, whether or not, I don't go off the official 3.8, but it doesn't matter if you go off the official or not. What's important is how many people are looking for work and how many people, higher openings jobs have. How many openings businesses have for new employees. The problem now, there's a twofold problem. One, the employers cannot find skilled employees. In other words, they can't find employees in the professions that they're looking for. So there's one of the problems is skill, actual skill. You cannot find employees that meet the demands of the job. So that's one thing that America has right now, a problem that it's dealing with, because it has a lot of millennials coming in to the workforce, but they have no experience and very little skill. And then the second thing that you see is that the number one concern right now for businesses, small businesses, is the cost of labor. So wages have gone up insignificantly to you and I, with a 3% increase. But for a business operating in such a tight environment, a competitive environment anyways, with all these regulations on top of each person and so many things to pay to government and authorities, etc., that even a 3% to 4% wage increase, which did happen in the past 2 years with Trump in office, is starting to really hurt bottom lines for companies. And so they cannot raise wages any further. If they will need to, in order to stay competitive, if they will need to expand, then they face a real problem with how to attract quality employees without having the ability to pay them more. And so the jobs market will be the most determining factor for when the next recession comes to the U.S. Because if you hear about companies starting to lay off people in order to keep their earnings artificially high, then that is the turnaround for the economy. That's when other companies will say, okay, well, heck, if they started firing, I need to start firing as well. And then it snowballs, right, and recession begins a few months later.
Yeah, and I was saying probably 4 years ago that these corporate stock buybacks were a problem. I said that at least 3 or 4 years ago, if not longer. And now look at the nightmare that this situation is creating. And that has completely choked the pipeline that you have just described as far as being able to hire quality, skilled employees because
Yes,
they don't have the revenue because they took the revenue and instead of investing it, putting it back into investment into their company, they put it into their pocket, and now they don't have the. Why would I if I have a skill set and I'm being paid a nice salary for my skill set? Why would I jump ship and go to another company to get the same or less, even less money than what I'm currently getting? It's not going to happen, and that's what these companies are faced with. And that's what I see as far as the skills shortage that we have in this country. It's not that there's a skills shortage. It's that, like you just described, they can't pay them any more money because they stole. I'm sorry, they did corporate stock buybacks and took the money for themselves instead of putting it into their company to be able to grow their company. And now they're paying the price. Or am I
sure.
wrong?
No, you're not wrong at all. In fact, look, stock buybacks are not they're a tool, so they're not a
Right.
bad use of capital money.
No,
If
but you
you're if
can't
you're
do
if
it for years and years and years, and that's what's happened.
yes, exactly, and companies have borrowed in order to do that. In
Right.
other words, companies have used the low interest rates, and instead of opening up lines of credit and having a lot of cash on hand right now, in order to grow, in order to capitalize on the fact that other companies are weaker and they can consolidate them for cheap, they have gone and spent it all on buybacks, record buybacks, and that is the problem. So buybacks, in and of themselves, companies can do very well by doing buybacks, but not when you use borrowed money, and not when you use money that needs to get allocated elsewhere. So I think those are the two cardinal sins that CEOs have done. They've used interest rates for low interest rates, which is a gift to them, for the
Right.
wrong thing, to
Yes.
borrow, and with the borrowing do things that have left them now vulnerable. So we have a lot of zombie companies that would have been dead if interest rates were normalized, and I think that is where you're going to see the real problem. What corporations are able to do once the banks start raising their requirement funds, and start calling in loans earlier than expected. All of these things are coming, and that's the real problem.
Yes, I agree completely. I mean, once if there's ever a return to even the neighborhood of normal, then these companies are gonna we're gonna see who has who has what. I mean,
Yeah.
when their cards get exposed, it's not gonna be pretty at all.
When the
There
tide goes out, you'll see who doesn't wear a bathing suit, as Warren
exactly.
Buffett has said.
Yep.
So,
And that day is rapidly, in my opinion, it's rapidly approaching, and there's going to be a whole lot of white and shiny out there that we don't want to see. So,
yeah.
but I'm grateful for what's happening with gold right now. I'm very happy with that, and I've been saying since mid late 2017 that gold is going to go much higher from where it is right now, and I said that beginning the second half of 2019 that we would see gold rising. That's being met. And I personally see um, the next level for gold being at 1450, and then and that's what I'm calling for the end of the year. And then I see 2020 being a really banner year for gold. I think that it's going to be absolutely, completely nutso what the gold market does, and silver is going to follow right behind it. or am I completely off base over here?
Well, silver is a unique animal right now. And like I said, if the dollar goes into a bear market, silver is going to outperform gold. But if it doesn't happen, silver is much more correlated these days with its industrial use than with the premium that it should get as a safe haven. And so, if you're going to see a recession, then only after the recession is over and you start seeing industrial demand rising, coupled with a dollar bear market, then you will see silver start to outperform gold. But for now, all the money of safe haven is going into gold. That's why you're seeing silver lagging so much.
Yeah.
It is at 92, 93 to 1, which is the extreme level for it. Ever since 1971. So on a risk reward ratio, you're definitely you're not making a mistake by putting money into silver right now. But I wouldn't be surprised if it closes the gap all the way to 75 to 1, and not any further than that for the meantime. Again, depending on when you're hearing this interview, if the dollar is in a bear market, this is going to be the best commodities bull market that you've ever seen.
What kind of odds do you place on the dollar dropping that point? We'll just say point and a quarter from where it is right now.
Well, if there's no trade deal coming out of the G20 meeting, and then a few weeks later you see a rate cut, then you can it's pretty much certainty.
Okay, I like it. I like that a lot. So, Lior, is there anything else that we need to cover? I mean, we've traveled a mighty road here in a short period of time.
I'd say, look, the most important thing to really understand is that you live in a have not economy, and there are many things that are different in this sort of environment than what you've been used to.
Yes.
You have to adapt and understand that the American dream is over. It's gone. By 2022, 2023, there will be no middle class in America. Done. There will be a higher class for people that are either in the strategic tech industries and are having live on a high wage, and are either on the executive level or above, etc. Those are going to be the top 10, 15%. The rest of the people, if they have to understand, their jobs are going to support a very simple lifestyle, and they're probably not going to retire ever in their lives. For the average person, he needs to understand that he needs to find a way to move from the from the have-nots to the haves. And we talk about some of the better solutions on how to do it on the free newsletter. We cover it all the time on Wealth Research Hoop. And I think you really need to go to wealthresearchhoop.com/top, which is where all of our PDFs are aggregated, and you can study a lot of what's going on right now and how to find a solution for it, because it's the solution is all that you should care about. The problems are out there. It's how you move from the have-nots to the haves, and how you educate others to take that journey with you, because we should not have this sort of an economy. This economy exists because most people are ignorant of what's going on.
Yes, and I agree. And folks, you are part of an elite group. You're hearing information that 99% of the people out there will never hear, and if they did hear it, they wouldn't believe it. So take advantage of of this free information. Think about that for a minute. The education that Lior is offering, that you have just garnered from listening to this interview, it's all free. The information that Lior is offering is free. Nobody's asking you for anything. We're only offering you solutions to the situations that are right there in your face. You've been coming to my channel for years for the same reason. You know what the problem is. It's time for solutions. Here are solutions. This is what we're looking at. This is what we're faced with. let's take advantage of it and do something about it. Lior, I really appreciate everything that you're doing. It's a great service to humanity, unlike the people on the other side of the fence that are doing a great disservice to humanity. So I really appreciate it. Folks, go over to wealthresearchgroup.com/top. Take a look at those reports and take advantage of free. Think about that, free. So, Lior, we'll do this
Yeah,
again in the not too distant future, and I certainly appreciate all your time.
I appreciate the time as well. Thank you, sir.
All righty.